Let's get more on how Asian markets might fare this week. Vasu Menon, Vice President of OCBC Bank Wealth Management, joins us from Singapore. Vasu, good to have you back on the program. So is this it? Is this when stocks fall off a cliff?
Well, I don't think they're going to fall off the cliff. I mean, stocks have been correcting on the back of growth concerns. Given what's happening in Europe, clearly it's going to send jitters through the Asian markets today. Also on Friday, we had the employment numbers out of the US, which was clearly below market expectations. Those two factors are going to send Asian markets, I think, lower today. I don't think they're going to fall off the cliff. I think the fact of the matter is that valuations in Asia are not expensive. There's an abundance of liquidity. I think if markets pull back another perhaps 5%, 8%, you will see bargain hunters coming back into the market to bargain hunt for stocks, because the fundamentals for Asia are still fairly strong for the medium term. And I think, global investors see good prospects for Asia. They see the growth actually being the brightest in Asia. So I think I don't see a sell-off.
Vasu, what do you think is going to be a bigger, indicator today for stock markets? Is it the elections over in Europe that's having a bigger effect, or maybe those disappointing non-farm payrolls from Friday?
Well, I think it's a combination of factors. I think what happened in the U.S. on Friday has led to growth concerns. It's going to clearly affect markets here in Asia. I think Europe is clearly a big factor that will come into play. What's happening in France will clearly lead to concerns that, the new French president could go back to the EU and negotiate the treaty. And in Greece, of course, if they don't push through austerity measures, then they will not get money from the IMF and EU. So those concerns come at the worst possible time, because in the last couple of weeks here in Asia, there have been a lot of concerns about, slowdown in the US, slowdown in China, recession in Europe, and now we have political concerns in Europe as well. So 4 layers of uncertainties, and that's going to hurt the markets here, at least in the short term.
Okay, Vasu, I got to get to some breaking news coming through from the U.S. side. It looks like the U.S. government is selling another $5 billion worth in AIG shares valued at $30.50 a piece. It looks like the U.S. government is unloading more of its stake in AIG, which is one of the world's largest insurers, of course. And the U.S. government bailed out AIG during the depths of the financial crisis, infusing about $190 billion worth. So I guess selling more of it off on the markets. Vasu, let me ask you this. With the U.S. government selling off more of its AIG shares, do they maybe see that this is a peak in the markets, and this is the most that they'll get for these shares this year?
Well, not necessarily. I mean, yes, they were in there bailing out AIG at the worst possible time, when AIG was going through a crisis. The fact that they're getting out right now may also mean that, they have confidence that the financial system is getting back on its feet. So it's not necessarily a negative leading indicator. I think we are still positive about the outlook for the U.S. economy, U.S. stock market. We think that among the developed markets, the U.S. market has probably got the best potential. Valuations are not expensive in the U.S. The financial sector is slowly getting back on its feet. So the sale by the U.S. government, we don't think it's a negative indicator. We think probably it's an indication that, there's confidence that the system is slowly getting back on its feet and probably requires less government support going forward.
Okay, Vasu, now you're sounding pretty bullish because you're saying buy on dips. There'll be buyers that come into the market on these declines. What do you add to? What positions do you add to in this market climate?
Well, Susan, among the major regions in the world, at the onset of my interview, it's quite clear that, you're quite positive on Asia, ex-Japan. If you look at how the MSCI Asia ex-Japan index has done so far this year, it's up 12%, almost double of what the MSCI World Index has done so far this year. So clearly, Asia is leading the pack. Growth is the brightest here in Asia, ex-Japan. Valuations are not expensive. And you look at the liquidity in the system, the amount of deposits sitting in the banking system here in Asia, ex-Japan, stands at about US $17 trillion. That's a huge amount of money sitting on the sideline, earning low interest rates. And clearly, I think, that's one reason to be positive on Asian markets for the medium term. I think any kind of sharp pullback, that money will move from the sidelines back into equity markets, because the long-term prospects, we think, are still very positive for Asia and Japan. And that's where our biggest bet is.
Vasu, thank you so much for your time. Enjoy your trading week. Vasu Menon, Vice President of OCBC Bank Wealth Management.